Ladies and gentlemen, welcome back to the channel. We have a crazy week coming for the stock market. We're going to get into the economic data for this week, the jobs report that is coming out, the ISM service PMIs, the manufacturing PMIs, all of the data that you need to know. We have a bunch of earnings that are going to be important, big names, by the way, and hopefully the war with Iran coming to an end. We do have some news on that we're going to get into here in this video. First things first. And look, we could have quite a rotation on our hands. We did see on Friday this new bull market really starting to show itself. And that could have some serious legs to it this upcoming week. Now, we're going to get into all of it in today's episode. Don't worry, if you own stocks, watch this video in its entirety to get ready for this upcoming week. But first, before we get into it, hit that like button, subscribe to the channel if you guys have not done so already, and check that link out down below in the description of today's episode if you guys want to come trade and invest alongside of us. Where, look, we're trying to find the next big winners. We're planting seeds right now for the next 5 to 10xers like we were a year ago in the data centers, right? A year ago, data centers were not loved. Now they are. You want to be looking ahead and planting those seeds before everyone else loves what you're buying a year ago, right? We'll talk about that more in just a few minutes. Let's begin. Okay, so we don't have a ton of headline news to get into today, so we will start there. Iran's top negotiator, Galibov, says there is no faith in enemy pledges, only tangible outcomes count. He then went on to say that no agreement will be accepted until the nation's rights are secured. Also in the news today, 3 offshore platforms restart output at Iran's South Pars gas field. So that should be good for oil markets. Iran's Revolutionary Guards strike separatist group sites in northern Iraq. And in the news just about an hour ago, mediators are continuing to discuss a memorandum of understanding between Iran and the U.S. as of Sunday morning. So there's still, we don't know what the hell's going on. Let's just say it like that. We don't know what's going on, but we haven't really heard any good news or any bad news on this over the weekend. And optimistically, we could see an end to the war soon. I mean, that's the hope. I mean, that's really the only path forward, as I've told you guys for a while now. There's too much risk in restarting a physical conflict with Iran, with treasury yields where they are and with oil where that is. There's really no other choice but to end this conflict, or you really open Pandora's box. A full-blown disaster would unfold. I mean, the markets would fall 10 to 30%, like or more. It would be really bad. Trump doesn't like to, you'll notice, Trump doesn't like to create problems he cannot easily fix. This would be a problem he could not fix with a tweet. That's not how Trump rolls. And it does look like, as of right now, futures are implying an open for the Dow up 0.3%, S&P up 0.1%, and the NASDAQ up 0.1% as well. So there is a little bit of optimism heading into this new trading week, but let's face it, Friday the markets really didn't go up that much either. The S&P was up 0.25%. The NASDAQ was up 0.37%. This is because the new bull market that starts after this conflict with Iran ends doesn't really have positive implications for your indexes. First, before we get into that, the economic data and the earnings that you need to know for this upcoming week, I want to tell you guys something. Right now, you need to be focusing on the companies that are going to outperform over the next 6 to 12 months. Congratulations. If you're like us and members in the trading community, you've made a lot of money on the AI hardware trade. But as the war with Iran comes to an end, as the Fed funds futures markets reprice for a less aggressive Fed, as oil comes down and economic activity is presumed to be better, inflation presumed to be lower, there are a whole new group of stocks that are going to lead this market. especially considering the hardware trade. A lot of those AI stocks have doubled in over a month. There's no opportunity there anymore. And like what you seen on Friday, the IGV was up over 6%, 7%, including the move in after hours. A lot of that money is going to go from hardware into software. Now, if you guys want to come trade and invest alongside of us in the trading community, look, we are trying to get rich quickly in the next 1 to 5 years. The only way to do that is to be heavily concentrated into big winners. We're talking 5 to 10 different stocks maximum. The sweet spot is usually like 6 to 8 different stocks to have all of your money in those stocks. You want to make sure you understand these companies better than you understand yourself or what you want to eat for dinner. Okay, you got to understand these companies very well. That is what we are doing over there. Providing the research, the thesis, the due diligence, why we think these stocks are going to 5, 10x in the next 1 to 2 years. If you guys want to come join us, that link is down below in the description of today's episode. We take the Stanley Druckenmiller approach to investing. So while I don't have 30 minutes right now to tell you about that, if you want to kind of understand more of what we're doing over there, just research Stanley Druckenmiller and how he became a billionaire. It's putting all of your eggs in high conviction baskets and outperforming, right? That's the idea. And going ahead over the next 6 to 12 months, you're going to see a totally different group of stocks outperform. This is the pivot moment, in my view, to be a part of the new bull market. The new bull market's going to favor AI software. Okay, that's number one. AI software. We've seen that on Friday. AI software is king. Cyclicals, financials, robotics. Yes, the data center theme could work, and there are some that I really love. The energy trade, like nuclear, I expect could become popular again in the next 6 to 12 months. Okay, if there's energy constraints, you can only deploy so much Capex and buy so many chips if you don't have the energy to bring those online. And then crypto, that's a big maybe. There's quantum risk. This is, my friends, the new bull market. If you guys want to come trade and invest alongside of us, that link is down below in the description of today's episode. And now back to the video. I do expect this new bull market will continue to show itself. Look, I think there's a lot of risk in the hardware trade right now as you've priced in a lot of good news. You need a consolidation. And look, here's the risk, right? The risk is hyperscalers are going to spend $700 billion this year in Capex, last we knew. Wall Street right now, they're expecting $1 trillion of Capex spending next year. These stocks are pricing in more than that. These stocks are pricing in between 1.1 and 1.2 or maybe 1.3 trillion. That means to really get upside, you need something like that Capex number to give you upside. Now, I think there's a lot of risk in that. I think, obviously, if hyperscalers come out and raise Capex guidance again, which they're going to be reporting in the next 30 days or so, like, what do you think is going to happen to Meta if they raise Capex another $20 billion? What happened to Meta last earnings? They fell 10%. You know, that's risking a lot. But beyond that, like, as an aggregate, okay, if there could be bottlenecks that prevent the kind of Capex spending that Wall Street thinks, right? Look at memory. You can only spend so much on Capex if there's one thing that is holding up the ship, right? Earl Nightingale, there's a great video on YouTube. Let me show it to you guys that like changed my perspective in business. So the video here on YouTube is The Strangest Secret by Earl Nightingale. And basically watch this video, by the way. This is a hidden gem, okay? But he says the economy is not fixed to prevent the strong from winning. It's fixed to prevent the weak from losing. Just the same way as a military convoy has to go at the speed to permit the slowest vessel to stay in formation, this AI trade's only going to move as fast as the slowest piece of the supply chain. Okay, so that might be memory storage, that might be energy. I think it's a risk that nobody's thinking about. Can you scale Capex in that kind of a fashion that Wall Street thinks, as memory has these supply issues, right? As there's ongoing issues about energy. That's a question I don't have the answer to. But look, memory companies, they're not raising output, they're raising prices. They're packing more memory into memory components that are costing 5 times more than they were a year ago because of these supply imbalances. You can only spend so much if you can't get your hands on memory. So I think that's a potential risk that could slow the whole thing down. Nonetheless, we do have a lot of other earnings as well for this week, and this new bull market's really going to be in focus, especially the software trade and even the hardware trade. So Monday in after hours, you're going to get Hewlett Packard Enterprise. You're going to get Credo. Tuesday pre-market, Dollar General, Victoria's Secret. Tuesday in after hours, Palo Alto, GitLab, Alta. Wednesday pre-market, Medtronic, MiniMed, Ollie's, and Macy's. Wednesday and after hours, Broadcom, CrowdStrike, C3AI, Viva, Five Below, ChargePoint, PVH, Petco, and Netscope. Thursday pre-market, Sienna and Toro, Orion, and then Thursday and after hours, Rubrik, Planet, Lululemon, DocuSign, Samsara, Service Titan. So a lot of software names and even some of the hardware trade as well with like a Broadcom that are going to be reporting earnings. Lulu is also one that I've been eyeing for a while that could be very interesting for a cyclical trade, especially if the stock sells off. Oh my gosh, if the stock sells off, I think you could have one hell of a buying opportunity on your hands there, as a little bit of a side note. Now, we are going to have a bunch of economic data as well. So starting off tomorrow morning, you have the S&P Global Manufacturing PMI, final numbers for May. ISM Manufacturing PMIs for May. Manufacturing is a lot less important than services, okay? Manufacturing is like 20% of GDP, of the economy. So it's not that important. Markets will move a little bit, but it's the services that matter more that we're going to get later in the week. Now, on Tuesday, you're going to get Fed Hammock that will speak. But the big data is really JOLTS job openings, expecting job openings to actually go up a little bit by about 40,000 to about 6.87 million, right? This is kind of a leading indicator to the labor market because before companies typically fire people, they take down their job postings, right? In simpler terms, if your local restaurant is looking to hire 3 employees, before they fire 3 employees, they're probably going to stop looking to hire 3 employees, right? So it's kind of a leading indicator, one would say, to the labor market. Now, you also have the RCM TIPP Economic Optimism Index that will also be coming out. This data comes out at about 10 o'clock in the morning on Tuesday. On Wednesday, this is your important data. This is what will move the markets. ISM Services PMIs. Not expecting much of a change from the headline numbers, but you get business activity, employment, new orders, and prices. Okay, so those are going to be important, specifically prices. Prices are going to make or break potentially the day on Wednesday. Now, we'll see what happens with the war with Iran and all of that, but all else equal, that's what the markets are going to care about. On Wednesday, you are going to have the Fed Beige Book that will also be coming out. On Thursday, you're going to have initial jobless claims and challenger job cuts. So planned layoffs and initial jobless claims, the definition of the leading indicator for the labor market. On Friday, you're going to have non-farm payrolls for May, expecting 96,000. So pretty good number there. Markets are going to pay attention to it, but honestly, you don't want this too strong. You don't want it too weak. So anywhere between like 50 and 100,000 is probably good. Anything higher than 100,000 is probably not great. Anything lower than 50,000, probably not great either. But a low number could send some of your cyclicals, financials, software higher, as the Fed, the probabilities of Fed rate hikes would definitely drop at that point. The unemployment rate is going to be coming out for May as well, expecting that to actually come in at 4.4%, up from 4.3% in the last report. Now, again, I just want to say, if the war with Iran comes to an end, which is a big if over this weekend, heading into tomorrow, look, the areas that are going to benefit are the cyclicals. They're the financials. It would be a broadening out of this market. Mag 7 might benefit. They might not. Amazon and Tesla probably benefits. A little bit less so Meta and Google and Nvidia. Semiconductors probably sell off a bit. A lot of money has went into Mag 7 and semiconductors as this war with Iran has lasted longer and longer and longer. People have kind of plowed money into those areas. I think without the war with Iran, you probably wouldn't have seen AMD and Intel go up 150% in a month, right? As an example. So, as the war ends, you probably do see a little bit of a give back there. I think expectations are pretty high. We do have the SpaceX IPO coming out, June 12th? June 12th or June 14th? I think it's June 12th. Might be June 14th. And yeah, that's going to be weird for sentiment a little bit. I think what we've seen with software on Friday has legs to it. Don't be surprised if, tomorrow software stocks are down a bit, just as a little bit of a reset. Some of these stocks had big moves. ServiceNow was up 14%. That's good. This should happen. People are underweight these areas. They're heavily short these areas. The SaaS apocalypse never really existed to begin with. It was all fear. And end of the month rebalancing kind of kicked in on Friday as well. But again, those software companies, especially that have the data components or that are irreplaceable, that have no disruption risk, those are the areas you really want to be focusing on right now. Those are the areas that we have been focusing on for the last 2 months in the trading community. And I think these are going to be areas that continue to outperform as the war with Iran comes to an end, as looser monetary policy gets priced into the markets by the Fed, as oil comes down. This is going to be a big winning area, but there are also other potential winners as well, like travel, like cyclicals, like financials, small caps, and tech, excluding Mag 7. So you really want to be thinking about where the puck is going. Not what is popular today, what everyone loves today. That's priced in, okay? The good news is priced in there. You want to be thinking about what areas could have positive surprises, earnings, and kind of tailwinds as the war with Iran comes to an end, as people look for other places to put their money. So in conclusion here, I do think this week could be quite volatile, especially if the war with Iran comes to an end. And a lot of people might be caught off guard, caught by surprise with what happens in the markets when the war with Iran does come to an end. Now, again, if Mag 7 and semiconductors sell off, and there is a rotation into the quote-unquote new bull market, cyclicals, financials, AI software, small caps, the market weighting in the S&P is almost nothing in those areas. So you would theoretically see a sell the news event potentially in the S&P and the NASDAQ, but you can actually have more stocks that are going up than going down in that event, right? You could have pressure on the indexes, but actually a lot of the market doing very well if the war with Iran comes to an end, as the rotation kicks up more steam, right? Or picks up more steam. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. Again, if you guys want to come trade and invest alongside of us, that link is down below in the description of today's episode. Have a fantastic rest of your day, and I will see you in the next one.